Hello guys, welcome back to my channel. In this new video, we're going to conduct a backtesting session, a highly requested topic. Many traders don't know how to properly backtest ICT concepts. I'm going to use my bread and butter strategy that is based on time frame alignments and backtest it for a whole week. We will randomly select a week using this website here to give us a starting date for backtesting, and you will see my thought process, how I read price to determine the buys from the higher time frame to executing on the lower time frame, and also the trade management, so how I adjust my stop loss based on what the price is doing. And now let's get started. Alright, so let's start guys, but first of all, make sure to follow me on my Twitter account. I post weekly outlooks here and my trade breakdowns and trading tips. And now let's start backtesting session. But first of all, we're gonna choose a random week, right? A random date. So we're gonna choose, we're gonna use this website. On here, we're gonna choose one, right? And let's go from 2017 all the way to 2023. So that gives us around 7 years, right? 7 years of data. On here, we're gonna choose Sundays, right? Because we're gonna backtest a week. I want to start from the beginning of it, Sunday. This is usually the time that I do my weekly analysis. And alright, so let's get the date from here. 2020. And this is October the 18th. All right, so let's head into FX replay and let's create that session. You can get 15% off and 5 days trial if you use my coupon code stranger. All right, so make sure to check that out if you are interested. So from here, I'm going to choose account balance. And the pair, we're going to use EURUSD just because it's volatile and it will give us a couple of trades per week. Now let's talk about my trade frequency. I always aim for 2 to 3 trades per week. So high probability trades, right? And honestly, on different pairs, right? So I don't take them all in one pair, but we can do that here, right? We can backtest multiple pairs, and this video is going to take forever, so we're going to stick to one and we're going to aim for 1 or 2 trades, right? High probability trades per week. So it was the 18, right? And let's start the backtesting session. Now, before we start, let's talk about my trading approach. So I usually use my bread and butter strategy. I shared it on my YouTube channel, so I talked about it a lot in my previous videos. You can go and check it out. And also I use expectations, right? Meaning I will put certain expectations and potential scenarios in my mind, and I want for price to meet those expectations in order for me to react. Let me give you an example. So let's say, for example, I want to see bullishness on EURUSD, right? So my expectations is maybe I need to see a price break that particular high or close above that bearish fair value gap, right? Or violate that bearish order block, on all kind of time frames. It doesn't matter. So in order for me to anticipate with price, I need my expectations to be met. I hope that made sense, and you're gonna see it clearly how it looks like in the chart. So let's start with analyzing this, right? Let's make this full screen. And let's start with the weekly chart. So the first thing is I want to anticipate or predict the next weekly candle. So whether it's going to be bullish or bearish, a down close candle or an up close candle. This is very important for me. Now I can reevaluate that or switch my buys during the week, usually around Tuesday, right? After I get 2 days of data, that would either confirm my buys or I'm wrong and I need to switch it. So for me, this is an initial buys. So let's start, see what's going on right here. We can see that we are rejecting from this weekly fair value gap, right? And let's go to the monthly. I believe we have an inefficiency here. Yes, we still have inefficiency on the upside, so this one, I guess. And we're also reacting from a monthly fair value gap. Let's go back to the weekly chart. We swept the previous week low, right? So this is important. And we lift a failed swing right here. So this will act as a pool of liquidity, right? So we have untagged liquidity on the upside. And for me, my initial buys is bullish. I'm bullish on Euro USD, right? So let's go to the daily chart and see what's going on here. Let's remove this. And on the daily chart, I can see that we tapped into this inverted fair value gap right here, right? And now we rejected heavily from it. We have this fair value gap right here, right? This inefficiency. So basically my approach in trading is I will either target an inefficiency or an external range liquidity, so in the form of old highs or old lows. So on the downside, we can see that we cleared liquidity from here, from these two, or this swing in particular, so this one right here, right? We cleared liquidity from here and we tapped into this inverted fair value gap. On the upside, we have this inefficiency and these failed swings right here. Also these failed swings. Now let's check if we have any kind of SMT divergence. So let's pull out the DXY chart. And this is the great thing about FX replay. I don't believe other backtesting software have this feature. So in here we don't have alright, so we do have an SMT divergence. So if you compare this high right here, right, we took liquidity from it here, but on here we didn't. This is a failed swing, so we have an SMT divergence here, right? SMT. So we can potentially see a price reach this inefficiency at least, right? At least we would like to see price reach to this inefficiency. As you can see, I took a lot of times in the daily and weekly chart. This is almost like 8 or 9 minutes. And this is very important. You need to spend most of your time analyzing the higher time frames. You don't want to take, I don't know, like fake market structure shifts on the lower time frame. If you want to avoid that, you want to spend most of your time analyzing the higher time frame. Now let's check the calendar. So we filtered here only the high impact news. and we have this speeches, right? On Monday, alright, so Monday, this is it. We don't have any FOMC or CPI or NFP, so this is good. The price action can be chopped around those times, right? So let's go to the 4-hour time frame and see what's going on. On the 4-hour, price is still bearish, right? So it is now, it's respecting the bearish BD race, for example, this order block right here and the fair value gap, right? So this the fair value gap right here. Price is still respecting this. So let's go to the 1 hour, see what's going on. So for me, so this is an example of my expectations that I told you about. For me, if I want to long here, right, if I want to take long positions, I want for price to violate this swing right here, right? And if price closed above this swing, so that tells me that there is a good indication of higher prices on Euro USD. So now let's forward price and see what's going to happen. Now let's annotate the midnight open, right? And very, very important. Price now started trading higher, but we didn't really trade below the midnight open, right? This is a shallow run. So for me, my ideal scenario would be price trades below the midnight open and then make this move. But let's watch. We kind of have that move, that Judah swing right here, but let's see what's going to happen. All right, so price closed above this swing right here, as you can see. This is a breaker block, right? Let's go to 15 minutes and see that Judah swing again. Alright, so I believe this is enough, I guess. And because we started going higher, and one more time taking liquidity from here, and then price started going higher. Now, why this happened, why we didn't see a 20 pip or I don't know, like 25 pip Judah swing? For me, my understanding of price, we don't have really any reason for price to go all the way to here, because we are inside this breaker block, right? And we have already took liquidity on the downside. So there was no reason for price to come back all the way to here to do that 20 pip Judah swing or something, right? So we closed above this swing, we have this displacement, we have this fair value gap right here. So this could be our point of interest. The London kill zone is already over, and maybe you can get an entry, right, during New York. Now we can see that our draw on liquidity has been tapped, right? So I told you that I'm favoring the upside, but price didn't give us anything. It didn't give us an opportunity to long to this, right? So let's see how price reacts to this fair value gap. Let's see if price would respect it or it will close above it, and then maybe we will look for long opportunities to this high right here, to this pool of liquidity. So let's see what's going to happen. Let's go to the 4-hour chart. I believe the 4-hour is... So we had an expansion higher and then price started consolidating, right? So this is logical. So as you can see, during the New York open or the New York kill zone, price didn't move at all. So I believe Monday is over for us and we're gonna come back Tuesday and see what's going to happen. Maybe you can buy from the 4-hour fair value gap right here. Alright, so now we are on Tuesday. So let's annotate that midnight open again, right? So very important. Let's remove this one. Now I can see that we are consolidating. We consolidated during the Asian session, right? So this is potentially a power of 3. No, all right. So let's go to the 4-hour time frame, and we can see that we tapped into this breaker block that we talked about earlier, and we cleared, right? So this is a breaker block. Let's make it a little bit bold, right? So if we go to the 1 hour, we can see that we have an accumulation here, right? So this is an accumulation during the Asian session, and this could be the manipulation into a 4-hour breaker block, right? 4-hour breaker block, and then we could see a distribution to the upside. So for me, let's go to the 4-hour or the 15-minute. We closed above this breaker block. I'm sorry, mitigation block, right? So a mitigation block on a sell program. This was an order block. During a buy program, it will act as a mitigation block, right? So this is a mitigation block, and we could find support from it. All right, so we did find support. Let's go to the 3-minute time frame. Right, and this could be a nice entry. Measure this move right here, and I want to enter near the 50% area. So my stop loss is here, and then I would target the highs here. This is for 2.3 R. Let's put... Now, before we put our order, let me summarize why I want to take this setup. I don't know what's going to happen. I don't know if this is going to fail or it will win. And honestly, I don't care. I don't judge by one setup, right? So let's summarize. What do we have? Let's go to the 4-hour time frame. On the 4-hour time frame, we closed above this breaker block, right? And then we come back to it. Before we came back to it, we were accumulating orders, right? And then we have seen a manipulation into that order block, right? And this fair value gap. And now we want to see that distribution phase, right? And if you go to the 1 hour or the 15 minutes, we can see that price after midnight, it traded below. So if you want to take long setups, if you are expecting bullish price action, you want to see this kind of moves right here. So a Judah swing to the downside. Now after this Judah swing, after the 4-hour, I want to look for change in the order flow on the 15-minute time frame, right? So on the 15-minute time frame, we were bearish right here, and then we had this displacement to the upside. We closed above this mitigation block, right? And this breaker block right here, this one right here. And now, after price return to this mitigation block, if we go to the 3-minute time frame, we had another displacement, right? So basically we are aligning the time frames. We are aligning the time frame one by one, right? So now I'm gonna put my setup, right? Let's see what's going to happen. Let's see if price would tap us in. So we are in right now, and now let's manage the trade. Now I want to move my stop loss just a little bit, right? Now I want to go break even. I don't want to see price go all the way to here, in my opinion. Here we go, guys. Plus 2.2, right? As you can see, this was not hindsight, guys. I'm reading price live in front of you. Although this is backtesting, but we chose a random date, right? And I took you from the higher time frame all the way to the lower time frame. So for me, I'm more of a one-shot, one-kill trader on every pair, meaning every pair. Let's say, for example, my watch list has like 5 pairs during a week, during that certain week. I would look for one setup on each of those week, right? Only one clean setup. Now I can forward price all the way to Friday, right? So we have 3 more days, Wednesday, Thursday and Friday, but the video is kind of long. It's gonna be long, and I don't want to bore you guys. My purpose of this video is not for me to show you how much percentage I made during a week. My point of this video is teach you how to read price, guys. Teach you how to properly read price and backtest, right? And so I believe I need to end the video right here. But before, let's go through the logic of this trade one more time. So let's go to the weekly chart. Alright, so on the weekly chart, I told you that I want to see from here. I wanted to see a bullish candle, right, to the upside. I told you that my initial bias is I'm expecting an up close candle, right, to attack this failed swing right here, because we have already done our business on the downside. We have already cleared liquidity and balanced imbalances on the downside. So this imbalance right here, and on the daily time frame, I told you that we have took liquidity from here. We found support from this inverted fair value gap. We had an S&T divergence. So these are a lot of confluences that support the idea of going higher. Do we have a reason to go higher? Yes, we have this inefficiency right here, and those weeks, right? Those weekly highs, right? As you can see. If we go to the 4 hour, as you can see, I'm aligning the time frames one by one. So on the 4 hour, we had an expansion higher. I told you I want to see price trades above and close above this high right here. So that was my expectation, and if price did that, and we did see that on the chart, now I would consider going long. So we had that initial run, and we tapped into this draw on liquidity, but my draw on liquidity is those equal highs on the weekly time frame. So I'm still looking for bullish price action, right? After that, we had a consolidation, right, during the Asian session, right? And then we had the manipulation to the downside, a quick move, and that manipulation was aligned with the midnight Judah swing. So these are that's a great confluence into a higher time frame PD array, right? So all these are indications of price wants to go higher. That's on the 4 hour. On the 15 minute, after that Judah swing, we immediately rejected to the upside, right? Closed above this breaker block and this mitigation block, and now this mitigation block will act as support to push price to the downside, to the upside I mean. And that's on the 15 minute. And if we go to the 3 minute, right, so this is the close. We came back to that mitigation block, and as you can see, this is beautiful, guys. This is algorithmic, right? And the bodies of the candles weren't able to close below that mitigation block. And after we came back to that mitigation block, we see a displacement to the upside. And this is what you want to see, a displacement. Just like we saw it on the 4 hour, we saw it on the 15 minutes, and now we are seeing on the 3 minute time frame. So you want to see a displacement to the upside. And we took our entry just above the 50%. You can take it from the OTE, but I don't like to risk missing beautiful setups like this. And then price immediately went to our objective. Now let's go to the hourly time frame and see if price would reach these highs right here. All right, so we did. Nice. I can't ask for more. So if you found this video helpful, it was long, but I believe it was worth it. You need to watch this video at least 2 times, guys, because this is how you need to read the price. I'm not looking for patterns on the lower time frames. I'm not looking for market structure shifts. I'm reading the narrative, guys. And this should be, if you are a beginner trader, a beginner ICT trader, this should be your main concern in the new year. You want to learn how to read the narrative. Now, happy trading and good luck.